Yo, 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 Larry Lots, back in the spot again. What's good, man? What is good, YouTube, man? Let me go ahead and put my audio in. It actually was working crazy yesterday. I'm gonna just go ahead and get set up. So I want to hurry up and get this video in for two reasons. I'm actually in a trade right now, so I wanted to let y'all know. Let y'all see what's happening with the trade. Gold's actually been cooking lately, and it might have looked like it was in an uptrend, but to me, it broke these structures here, showing that it's ready to sell. It could come down to this leg. This is a buying wick, so it's kind of getting scary, and it really could start to buy from here. But the main reason that I'm in the position that I'm in is because I had a continuation model. Now, 693.1 is getting a little spooky right here, see? So I might just take full TP down here. One, I got in so late, and I just added the entry. I could have swore I added a position. It didn't even add the position, so I can't even get in. I was wondering why the profit amount didn't increase, but it don't matter. It's all good. So I have another entry right here. And I'm taking it to 1-to-1 now. I do the continuation to the 1-to-1 now because I was getting cooked up before. 692.3. Well, I didn't even take it, so I mean my take profit should be here. I got in late. I got in like right here. I thought I had the position tool set up. Overall, I'm still gonna be content with the win. I low-key might just take profit here because this is 1-to-1. Yeah, I might just close it here actually. Since I didn't get to add the position, there's no point in holding this trade. Definitely 1-to-200 if you want to drop real quick. Yeah, that's cool. All right, that's cool. What? Some technical difficulties, but as y'all saw, I just got it one on camera. Easy dub. Now let me break it down for you, and then I'm going to go over the trade recap from last night. I did win that trade, so y'all saw that one. Oh, wow. It wasn't even plugged in this whole time. All right, so I did win the trade from last night, but then I also won a small trade slightly after that. Well, I actually got taken out break even, and then I won a trade during New York session today. So that's what I'm going to be going over. If we look on a higher time frame, price made a new high here yesterday on the hourly, and then it had a major drop. It broke structure. See, this candle closed. It closed. Let me zoom in. Structure. This candle closed below this wick, which constitutes a change of character. But not only that, if you have two change of characters, you have a change of direction. Boom. The price is probably gonna smash TP right now. But my original TP was taken, so I'm not gonna get greedy. And because it didn't, I thought I added a position on my phone. I was trading mobily. That's not even a word, is it? But anyways, it didn't add a position, and so I just figured I'd close 1-to-1. I had already gotten so late that like I basically was at a 1-to-2 point. If I would have got in right here, I'm at a 1-to-2 point 20 something. Like if I added the position here, which is what I thought I did, I have another 1-to-1. That's another $70+, which is cool. I'm on a 25K. Oh, and I have my full drawdown back for I'm all over the place with this video, but look, bang, 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 full drawdown back on the 50K. It took me 2 days of great trading to recover 1 day of foolishness. Imagine I did lose 1,200 the first day I was disciplined. I lose 600, 800, 1,000. Foolishness. But all that to say, I want to now go to copy trading. I don't know if I'm getting carried away here, but it's double the account, so I should have double the size. I might make the multiplier for this 50K times 2. And so that way everything that I'm taking is basically essentially doubled. Because one, it is an eval. I do care about it, but I need to pass a little faster than I'm trading these other accounts. 2, I'm pretty sure I have intraday, but for some reason it's not really affecting me. I'm pretty sure I was in profit for some trades and it went to the negative, but I was only negative basically what I was risking. So I'm not complaining. But back to what I was saying. Structure. This candle closed below this wick. probably doesn't look like it, but the low here was 81.3, and this candle closed at, interesting. Not this one. This candle. This candle from yesterday's drop closed way below that. It's clear now. It closed below this retracement, which made the new high. Yeah, price is just dropping. I just didn't have a conviction. I had the conviction, but I didn't have the conviction because I didn't actually get into the trade. So it's like I didn't want to take this first trade to the second trade I did that I didn't get to get in when I won. Yeah, I didn't get to get in. And two, I already entered this late. This is a 1 to 2.24. But it doesn't matter. It shows I had the right idea. I had need better execution. I had just pulled up to my apartment. Just started looking at the charts. I got out the car. I was also in a Bible study. So, like, I wasn't, like, it was nearing the end of Bible study. So I just pulled up. I'm like, all right, let me look at the charts. I wasn't looking at it the whole time I was driving. I had stopped probably a little bit prior, and I realized, like, all right, yeah, we're in a bearish market, and price is selling crazy right now. So I could be looking for some sales. I saw the 5-minute continuation. By the time I really had to see the candles, like, I got to make sure that's actually how I got my win earlier today. I got to make sure I added that pattern to my chart. I don't think I did, actually. I might have. Yeah, I might have. I think those are the last two ones. I just basically have a little setup of rules. And with that being said, I'm going to take a picture so that way I have it. Now, all right, here we go. See, this is authentic, man. It's some authentic video footage right here for y'all. I might make it a little more clear, but all right, legit. Let me go over what I'm saying. Price created a change of character below this recent low, which created this new high here. So this is our last line of defense. If price comes past your last line of defense, it's not the end of the world, but you have to be very patient in terms of thinking it's going to buy to the upside. However, our previous line of defense was here. I recently just started really like locking in on making a firm decision on if I believe we're going to continue to buy here or if we're in sells. Now, granted, you might think, whoa, we went below here and we tested here. Of course we had to buy. Yes. But this buy is not because of here. Well, yes, it is because of here. But it's really because after we create a break of structure or change of character in one direction, we need a retracement. So if we start looking at this as a selling market, forget this being blank space to the left. Forget all this blank space to the left. If we start looking at this as a change of character and a break of structure, and we're expecting sales, we need price to retrace, which it did, and then it's gonna sell back down, which it's doing, which is why I was in the sell buys in the first place. Not only that, we had a break of structure here. Even if I thought it was buys, because this candle closed above this previous hour, I already said, like, I'm not taking any like trades with direction when the hourly closes until it retraces, and then I'm going to look for it to retrace the top because I've been losing like that. But if we take a look here, we go down to the 15-minute, we see it had a aggressive sell, so I would have had no chance to buy. Even on the 5-minute, aggressive sell, and on the 1-minute. So with that being said, the aggressive sell on the 5-minute also broke structure. We had this structure that was broken and this structure that was broken. That's two structures broken. When you have two structures broken, you have a direction change. I could have got in anywhere up here. I don't trade until 8:10 during Asian session. Anywhere down here. Oh, here. This is when the first was forming too. That's another thing that made me really think like, oh yeah, it's time to sell. Regardless, I got in late, but I kept my risk. I adjusted my risk accordingly. So instead of having 3 contracts here, I only had 2 because I got in at like right here or something. So I risked 200 or something like that. So we had change of character. We had a retracement all throughout the day, which is all buys. Everybody thought it was all buys today. Cool. And then now, during Asian session, we're looking for sells. And this is where you get the idea where people are like, oh, Asian usually does the opposite of New York, or New York does the opposite of Asian and London. But it's really because, I mean, it's doing the opposite per se, but it's because it's using that other session as time to set up for the move that it makes. Yes, during New York, it had to buy up. It didn't have to, but like it needs to retrace. What session is it going to do? It can't do it during Asian if it just made the lows during Asian. So it's retracing. And then by the time the sequence of the day happens, it sells again. So I'm really rambling right now, and I'm probably not doing the best job of explaining. But on a basic sense, I believe that price sold yesterday. It broke structure. The breaker structure not only broke one level, but it broke two levels. This level, although it's higher than this, came before this low that was made. So that counts as one level broken and two levels being broken. One, two. Draw for you. Typically, it'll be easier to see if it looks like this. One level broken and two levels broken. This means we're selling. We had a situation like this. Here, here, here. It was still valid because it made a breaker structure, but then we had a price break below. And although it only broke past the most recent one was greater than both. So 1 and 2 structures broken. Look what we're going to expect. More sells. It's essentially the same as the last pattern. I'll copy this, and then we can compare. All right, yeah, sure. See? So this is essentially what we're looking for. It's the same thing. If I was to number them, this would be 1, 2. This would be 1, 2, and they both got broken. So, anyways, with that being said, once I have my direction confirmed, I look for entries. Where do I expect the price to go to? It retested here for the sells. I don't expect price to come lower than 685 without retracing again. It's also looking to break below and close two levels here. If it does this, it might want to close below here, then retrace, then head even lower. Because we made a new low here. We retraced up. We really do want to retest all the way down here at 672. The only thing you have to be mindful is when is it going to retrace before going all the way down here? This is what I consider a first leg. This first selling movement from the start of a direction is the first movement. So I think price would test down. It could close below here. Don't get me wrong. It's already at 92s. It's way past where the TP was. And I could have been talking this whole time and showing you. But again, I'm content for now. But now, on a serious note, yeah, it could test down here, then want to retrace there in the first leg. Ultimately, it does want to go down here because we have to retest it and fail or break below it if you want to keep selling on gold. Yeah. What is my reasoning for getting in? Continuation model. I have a big aggressive selling candle. All of these are big aggressive selling candles. The only thing is that lets me know it's ready to enter is that I have a bullish candle. You might not always get a bullish candle. It might look like a doji type bearish candle to show you that you have a continuation on the 1 minute. But let's look at 1955, which is 7:55 p.m. Eastern time, or 8:05 p.m. Shoot, could even look at 8:15 because you see this long wick, this like doji / hammer forming type candle. It's showing us that we're ready to get in, or potentially. We already know that these are the big aggressive selling candles. We have the retracement here. This is the 1945, not valid. We have this entry model right here. Made a low, made a high, made a low, made another high, broke below this. Now, I don't trade until 8:10. If this was you see, because look at this wick volatility at 8 o'clock. If I was to get stopped out because of something like this, it would be not an anomaly, but it's an uncontrollable event. And you can't control the market, but like it's the same reason you don't trade at 9:30 a.m. Eastern time. Well, for me personally, because the volatility is too crazy from market open. And secondly, it didn't even hit stop loss if I was to take a trade like this. And I don't even know if this is like, I also need to screenshot this real quick. I gotta turn on my trades. So in the meantime, let me go ahead and take that. I really don't know how I didn't add that contract, man. I really just couldn't tell you. But anyways, let's go to the 5 minute. All right, boom. See, this candle would have been here. Or maybe stop loss would have been here. I don't know. Maybe would have got stopped out. Regardless, that's what happened was in place. I'm not exactly sure because it's not real time. I want to use the candle that this bullish candle retraces into, but clearly, yeah. So we would have got stopped out here. But anyways, when you stick to your rules and you trade after 8:10 p.m., you have multiple lower lows being made. Then you have retracement, lower lows here, and then this is the new pattern that I've drew. You get lower movement coming here. When you get price here, but it doesn't, or the original pattern that I like is this. You get what I call a reversal pattern because price is moving up, but then it shows a double top, which is a sign that it wants to go back lower. You get this sign, and it's time to enter. However, lately what's been happening is price hasn't been pushing above a high, like if we're in sales, it hasn't been pushing above a lower high. It's been staying below it or coming equal to it, and then giving a reversal pattern. Ooh. And then we push down. And so I look for exactly that right here. Can we see this pattern in this price action right here? Push down here. It didn't go above here. Down, up, down, up. They're equal. Nothing closed above this wick. So as far as I'm concerned, they're equal highs. We made a new low though with this bearish candle, and then we retested into it. Which is, if you really want to have a crazy entry, you wait for the retracement. Just like how on the overall idea, you're waiting for the retracement. When you're trying to enter, you wait for the retracement. Even now, I got in so late right here, and we see price gave a way better retracement. Like you really have ample opportunities because the signal for us to really get in is when price closes below here, and then we get in. I could even say this: we had a down, up, and price closed below. Because it closed all the way down here, technically, if I want to use this, it never retested until when? Here. Now you have the same exact thing. Entry there, stop loss here, or the 5-minute candle that's retracing into, or in this case, it did retrace to here. So you would have 708.7, or you could still use 711. 711 point, whatever you use. And then you take it down for a 1-to-1. My original theory on this continuation model is a 1-to-1.5. Lately, I've been not as strict on holding it to 1.5. I don't want to say not as confident, but it usually moves. Before it gives me a crazy retracement, or accounting for the fact that I may be getting in late, I've been doing 1-to-1 lately for the last, since last week, and really Friday. So these last couple of days, Friday, Sunday, today, and Monday. So Friday, Sunday, Monday, Tuesday. It's been working out for me. Obviously, you can go for 1-to-1.5. Sometimes I go for structure, like I told you guys. I believe price is going to test these areas. I could have took it down to 694. But 1-to-1 just happened to come first for me. But regardless, that's tonight's trade. It took a little while to explain because I wanted to explain some market structure and how I look at the market. But then we go into today. A trade from this morning. I was in a trade from this morning, mind you. I told you. I was in the buys yesterday. Price went lower. Price really should be sells, but I'm believing it's going to retrace up. And I'm so glad I got out. Like, I got in a little late. Price, only reason I got in here was price broke above, had a break of structure above this, above 2 levels. Like I said previously, break of structure above 2 levels means a change in direction. So I believe we're ready to go up to retest to some extent. Because mind you, over here, we didn't have two structure breaks. We had one, but then we had price come down, push up again, retest, go a little lower. Now that we tested lower, we want to go high at least for a little bit. So because I got in late, here's a reversal pattern. Down, up, retest. I'm going to use these as my lows as my entry. I wanted to get in somewhere around here. And this is a standard 5-minute break of structure. Take it back to itself trade. That's a 1-to-1.12. Because of how late I got in, this is no longer 1-to-1. I was like, I got to take at least a 1-to-1. Let me take it to structure right here to the left. That's basically 1-to-1 or close enough. When I saw price get this close, because mind you, this is where it should retest to. Anything that it goes above this is congrats by chance. But I'm fully confident that price wants to retest structure that it previously made. It previously made this high with a break of structure and then gave me this entry. I should have taken TP here because of my entry, I did not take TP there. When I saw price coming down here, coming back to break even, I closed. I said I'm gonna just be done. I'm done. It's already basically 7 in the morning. I don't need to be trading gold anymore because I prioritize gold during Asian session. If I am gonna trade gold, look at what price just did. It's top of the hour. Shout out Top Step for that phrase. It just tested essentially down here. The first leg is getting tested. But anyways, top of the hour is also a dangerous time to trade. The next dangerous time to trade is 9:30 p.m. Eastern time because that's when the Shanghai markets, I believe, open up. So you got to worry about extra volatility coming in there. So the top of any hour, which is also why an hourly close makes a big difference. For example, let's go to the hourly. This hourly candle closed. Granted, this one closed as well, but then it's the start of it retested here. If I was looking for a change of character and a retest, the start of this candle already, the wick of it, which on a lot of time frame is candles, tested here and went lower. Now that this one closed below, price probably wants to retrace. And look exactly what's doing it. It doesn't have to, but it probably wants to, which is why you have to be cautious. That's the main thing I've been changing about my trading on Friday, Sunday, Monday, and today. If an hourly closes, I'm sitting out. I'm waiting. I'm missing it. And sticking to my bias and having conviction in it. That's the top of the hourly retracement. You're going to get some volatility. Price could very well keep coming down. Like, this is why I don't like to trade this, and this is why I don't like to trade this. Because you might think like I was wrong, it's buys now. What's your bias? Sells. So wait for a sell opportunity. Wait for a sell opportunity. Look, it looks crazy, but what is it? Candles aren't even closing above structures over here. They're just wicking up and wicking down, wicking down and wicking up. But anyways, I don't want to go too far off. I closed break even here, then I switched to NQ. NQ is what I trade during New York. NQ is my main priority. For the most part, or it should be anyways. Lately I've been trading gold, and lately I've been having success. But I want to see. Oh yeah, look, man, self-proclaimed TP sniper. Now, granted, I didn't even peep this. I literally never would have hit stop loss, which is actually so crazy to think. Like throughout the whole day, would have got that close. But this is the TP sniper to a T. Oh my goodness. And today I used structure. I didn't use one-to-one. Now, we had price showing that it was bearish. Why is that? I'm going to draw zones. When price made a breaker structure here, for me, breaker structure is when a candle closes below a previous bearish wick, if we're looking for sells. So price closed here, and the length of its wick was here. When's the next time that price close below there? Here. Okay? And then here. This one is cleaner and easier to see. Price broke below here. It retested. It went even lower. It retested. It failed. If we have two breaks of structures, then we have a change of direction. Price pushed all the way back up. It's not bullish, despite how much bullish movement we have, because the next level for it to break is up here. It did not break there. Because it did not break here, we don't have a change direction. You see what I'm saying? This was down. That was the first one. This was the retracement. This was the highest point it reached before making a new low. So this is the high that would show us if we have a change of direction. In this case, before, when it first happened down here, that would be a change of character. And this would have been a change of direction. One of these up here. But since we have two levels now, this is a change of direction. If price pushes up above here, we need to start looking for buys, but just not immediately, because price is going to retrace. And then it's going to go higher. Like, this is really a recap video, but I'm making an educational video over here. And because I'm doing that, I'm probably going to have to charge my my light at the same time. So, try and get that sorted out for y'all. Let's see if I could get this sorted out. All right, there we go. But anyways, what am I even trying to say? Yeah, so anyways, I'm looking for sales. And what did I say about the leg? Price is retracing into this area. This is the bearish wick. How did I come with that? When price retraced here before it made this new low, it had a big move down here, which was a change of character to this direction. We had a retracement. We had a reversal pattern. Bearish, bullish, bearish that closed below the wick of the previous bearish move, and then a retracement. Cool. The reversal pattern is complete for us to continue looking for sales. We sold down, and then we retrace. This sell, you can't see, I don't know, I'm putting the screen. It's separate than the reversal pattern that started it. This was already complete, which is why we got the sell. So now when we're looking for price to retrace into it, we're looking for the deepest wick that it could come into. Price came here. It had a reversal pattern, a bearish candle, testing the zone with the bullish candle, a bearish candle, a bullish candle, a bearish candle that closed below the wick of the first bearish move, and then a retest. The wick of this candle, even though it's a bearish candle overall, retested it, and then it started selling down. And mind you, even though it retested it, it did not close above it. See the wick high here, 420, and the wick high here, 416. It doesn't matter how close it gets, it's still valid. I went down to a smaller time frame. Oh wait, one last thing. Let's keep in mind, the low of this candle is, the close of this candle is 146.5. If I'm thinking it's going to go to the first leg, I have to keep in mind the body, the candle body. I really could have did this candle body since this formed the wick, but 146.5, which means I do one away. My take profit will be 147.5 if I want to take it down there. I looked for price to confirm that it was selling. What do we have? We have a change of character here. It's not two, or else it would be confirmed for sure, which is why when we have two structures here, change of direction, we had a retracement, and then a guaranteed sell for the rest of the day. Well, this is since it opened. Like, the principles are in action right now. This is the best price action to see this in. When you have two structures broken, you get a change of direction. This is where we had, I'll make it blue. This is the second structure. When price closed below it, right here it tested with a wick, failed. Right here it closed below the blue zone. After two structures are broken, we have a change of direction. That's the next level from a change of character. I should coin that. CHOD. Chalk. Look, man, we gotta change the direction. Price retraces. We don't know till where and we don't know till when. But when we get confirmation that we're selling again, we are gonna sell because the direction is now sells. It was already sells on the higher time frame. This shows that we're aligned on the lower time frame to match the bias of the higher time frame. That's when you have the highest probability for success. So anyways, back to my trade though during the day. We have big selling momentum. This is the time I shouldn't be selling. But the hourly did not, that was just forming, had not closed yet. See, we had this candle, that was at 9 a.m. And then we had the 10 a.m. candle that was showing the bearish pressure moving. We had all this pressure, all these bearish candles. I told you might have a bearish candle that gives you a continuation model. We'll go on to the 1 minute. I saw price push down. Then the same move I just showed. Lately, it's been pushing down, make another low. Then it gives this pattern. It gives a reversal pattern into itself. I saw price push down, long wick, push up, then it close below, push up again. It keeps resetting every new set. So we had a bearish, bullish, bearish, retest. Boom, we're good to get in. I got in right here. I used the stop loss on a 5-minute candle that price tapped into, which is up here. And then I took price to the low to the left that I said that I would. 146.5 is right here. 147.5 is right here. My TP actually ended up being 147.25, which, easily could have backfired against me, seeing as how precise it was. I was working. I set the parameters. I turned away from the charts for like a couple minutes. I was at work and I had a phone call I had to handle. When I opened back up the charts and I saw this candle, mind you, it looks like a crazy candle. That happened in the span, that was a 1 minute candle that just took me from 214 all the way down to 145.5. So I actually went 1 point below the target. And then pushed back up. Yo, you had a 100-point move in 2 candles. You had a 100-point move in 2 to 3 candles, and 3 1-minute candles. That's crazy. But yo, and after a trade like this, I ain't gonna lie, I didn't trade for the rest of the day, and I'm so glad I didn't. Like, I would have been. This is what you call a chop on a 5-minute. This is what you call a chop, because until price broke below here, I had no breaking structures. If price wanted to give me more continuation patterns, maybe, but it wasn't showing me anything like major. Only time would have been if I was looking at the charts at 2 p.m. I would have seen that we had the double structure break. And then I would have had to wait for the retracement anyways. And then I would have to try and get in here. And it was ultimately it wasn't worth it for me. Work was kind of busy, and I was just content. Like, it's like on the days I take a loss, I want to keep trading. But on the days I take a win, I do want to keep trading. But like, I don't know. I feel like I'm trying to have a greater sense of discernment right now. So I'm gonna go ahead and break down these accounts. I'm up. Lack of trade diversification. No evidence of stop loss usage or risk buffer. The first time I used this compass, it seemed really, really good. I'm not sure what it means now, because as y'all saw when I pulled up the charts, I had a stop loss in. Consistent position sizing and disciplined exit. Yes, sir. High win rate indicating effective entry criteria. Yes, sir. And what I learned is when I try and go for that 1.5, knowing that I have such late entry, it comes back to bite me, because I'm chasing something that wasn't there. When I was at 1,000 today on the account. Instead of chasing that 1,200 to make back what I lost other days, and then come in, I said, yo, if you're really gonna come into the session and win, come into the session and win. And I came into the session and I won. Like, look, this is 2 days. This is consistent accounts, because now I'm making sure I risk less than 200 or as close to it as I can. Like, it's not that deep. Slow and steady wins the race, man. The tortoise and the hare, man. He tells a very important story that I ignored. Let's get rid of that. Let's go to the 50K. Let me show you. High variability in trade duration. Some are fast. That trade probably took me 10 to 15 minutes. Some trades take, who knows, uniform contract sizing across the instruments. Yes. I don't care if I'm trading gold or NQ. I'm using the monitor sizing because I have a certain amount of risk that I'm trying to wait. And I know I'm sounding crazy. It's only 2-3 days on this account. I'm $24 in the green. That's nothing. I have a whole $3,000 to go. But it's about, like, it just feels a little different. Last week was hard for me, man. I lost all my fundings in the beginning. I think I lost the eval. I did terrible the first 2 days. I couldn't trade the middle of the week. I had to trade Friday. And on Friday, I went down 1,200. I was in my head. And now look. Days of good trading. This is a mix of Asian. This trade, 16 trades. Less. In one of my other videos, I said less is more. It's true to this day. 16 trades, 31% win rate. 4 trades, 100% win rate. 7 trades, 0. I didn't get not one win, and I kept trading that day. I won early on this day. I won 600 on Asian. I lost every trade after that. I won 600 during Asian with 2 wins in a row. I took 14 losers. Or I took 14 other trades that were a mix of wins and losses, where the losses outweighed the wins. So, yeah, it all depends. And then I have the other account, which I did not trade. Tonight with these accounts. I'm not really trying to copy trade everything, even though, like, I don't know. I gotta make up my mind about what I want to do. Because look, I'm up 300. I was down 600. I'm up 600. That was last night during Asian. And then today I traded the other account with Asian because I was already copy trading. So it's like, what do I want to do? And just to give you another real-time example, died. Let me charge him. I can't tell for this, but Anyways, it's not even plugged in. That's why. That's why. I see. But yeah, just to give you a real time example, would we have had an entry here? I wouldn't risk it. I wouldn't force it. But, anyways, look, my light's dying. It's looking like it's about time to go soon. Then, but more of the story, man. Yo, take your time. Be patient, man. Take your time and be patient, and you can literally, like, I don't know. I'm feeling good about these ones. I do want to repeated large losses on short entries. That's this day. That's this day. Why? High variability trade duration. That's also all those like negative stats are coming from this day. Obviously, I won on these days, of course, but it's it's like skewed data because of how negative this day was and why it was literally in, out, in, like um occasional long positions. Consistent sizing, that's what you need. So I think I'm gonna trade this one during New York tomorrow. I'm not sure if I might just call it for Asian tonight too. I'm not really. It's late. I gotta wake up. I'm supposed to low key be up in. I can't even start loading until later tomorrow. Less than 7 hours. So I haven't eaten yet. I wanted to go to the gym. I'm gonna go to the gym. I gotta shower. I gotta eat dinner. Like, um, it's a good amount of stuff I gotta do, and I already got a dub. Yeah, granted, I could have had a bigger dub, but I got a dub, and the wins add up. Small wins add up to big wins, and I'm ready for that to happen. So, I'm still deciding if I want to copy trade. I feel like copy trading is my weakness. So when I get to the point where I'm copy trading too many accounts, I don't know. I feel like my mentality would be good, but then I still perform poorly. I really can't explain it. But then it's like I'm in and out of the markets too much if I'm not copy trading, and it's like I don't know. Now I'm copy trading the other account. I mean, that one's up more now. If I was going to individually trade this one, but it's like if you really, I don't know. But what I really need to do is, even if I'm copy trading, my main issue is that I copy trade and I put on way too much size still. I need to copy trade and have a reasonable risk. So that way, if I'm going to decide to do whatever I'm doing, I don't tilt, I don't lose control, I don't lose composure. But more importantly, I give myself a chance to actually win. Like, even if I copy trade and I the proper risk and I lose 350 in a day and I wait, yo, 350, you're gonna lose a 600 loss limit. You can lose 2 days worth of losses just because you lost once. Like, so I just may, and then that'll make me think like, dang, bro, you're gonna copy trade, and you could have copy traded tonight. That's another thing. One last thing, guys. The week's almost over. Today's Tuesday. To me, the week's almost over. This is also what boosted my trade earlier. Right at 10, price spiked down, but I don't care if it's not red folder. Oh, that's CPI for Australia. We got news at 8:30 tomorrow. Could be a good little day too. But regardless, we got 10 a.m. news on Friday, which means that I'm not trading. I'm not trading Friday. I'm not trading on Tuesday. I got saved right there, bro. I'm taking 10 a.m. days off, period. Oh, all right, bet. And CPI days, I think I'm taking off. I need to write that down. I'm pretty sure I'm taking off the day before CPI. The day of CPI or the day before? I'm really not sure. I gotta look at what I wrote down, but I know it's one of them, and I gotta stick to that. So, anyways, man, if you learned something from this video, I know it's super long. If you learned something from this video, man, comment down below. If you got any questions, if you come across this video, let me know. Thanks for tuning in. Thanks for tapping in, man. This slowly but surely, man. If I keep getting wins like this throughout the week, yo, think about it. 1250. I keep saying the last thing, but yo, I'm sharing my thoughts, man. If I need 1250 to pass, I'm up 300 already, and I get 200 per day, 200 per session. Assuming I take no losses, I can literally pass in a week. 5 more days of that. 5 days is 1,000. I just need 800 more to pass. 850. I typically would have more than the 200 just now if I would have had proper entry, or if I go from 1-to-1. It all depends how you want to look at it. But am I gonna trust the process? What's the rush, man? Literally, nothing's gonna change. This is the type of stuff I'd be saying to myself, and I don't be listening to it. What's gonna change? Nothing. Nothing changes if nothing changes. And I keep doing the same habits that keep putting me back. And then I lock in for a little bit when I want to be consistent and make the right moves. Oh, something's gotta give. If I want to be better, I gotta do better. And now I'm just trying to be philosophical and rant and sound cool and sound all that good stuff. But nah, for real. If you got a plan, stick to your plan, man. If you got a process, trust the process. And that's pretty much it. So, if you seen this video, thanks for tuning in, man. If you learned something, leave a comment. Appreciate you. I'm going to catch you in the next one. Peace.